Okay, today's video, I'm going to remind you of something, and that is that actually nobody really knows where the market's going or what it's going to do. But if you want to make money with my work, then basically you trade the setups. And I'm going to give you an example of a recent setup and a trigger. Okay, it's going to be Google. When we had the panic the last couple of days and the market had a pretty healthy drop, one of the things that I did pretty quickly was I took a lot of the prior declines within the larger uptrend and I projected those all from the most recent high, looking for possible support. Now, I didn't know if any of those levels would hold or not, but I knew that if they did hold and if the market did respect that area, that I could go to a lower time frame chart and look for a buy trigger. And then at that point, I could define my risk either underneath this low or underneath the low end of this zone, which the low end of the zone would have been this 937.93 area. Okay, so far we've seen a really nice rally off of this area, but what I want to show you next is what actually told us that we could look at the buy side. Now, let's take a peek at a 5-minute chart in Google. Now, I've put out some trading plans recently. I've made them available to the public, and what I like to see is a moving average crossover for a day trade, for example. I like to see the 834 EMA crossover. That would suggest that the market is turning against the new support in this case. And then I also like to see it take out a prior swing high, indicating a reversal in pattern. Okay, so here, as we're trading down into that price support, you've got a pattern of lower lows and lower highs. But once you took out this high, it shifted to potentially higher highs and higher lows. Okay, we did see a nice rally from there. So not only did we see the 8 cross above the 34 as far as the EMAs, the crossover that I typically look for, you also saw it take out a prior swing high here. When both of those things occur, you know it's okay to look at a buy entry, and then again, either place your stop underneath the low, which the low in this case would have been under 940.06, or underneath the low end of that zone that I showed you on the daily chart. Now, I'm going to show you one more thing though, because there's a way that, and we actually did this and went over this in the trading room, there's a way that you can really further refine your entries. So you see here when we initially took out that prior swing high and you had the moving average crossover, after that we had a pullback. Well, the pullback occurred in a two-step pattern. Okay, so where I would take 100% of this first swing down, there's a little bit of that zigzag pattern. There was also symmetry from this prior high to low swing. There was an extension of this low to high. Okay, the 1618 extension overlapped. And then I believe there was one more key price relationship. And let's see, low to high. Yeah, pretty much the 618 retracement. So we had the two-step pattern into support after the initial trigger, and that gave you another zone that you could define your risk against. So instead, if you wanted to be a buyer against this support, then you don't have to risk all the way underneath here. You could actually risk to underneath this zone, which would be underneath the 943.33 area. Okay, I hope that's not a little bit TMI, but that's what I'm pretty much doing all day long. I'm running price relationships in multiple markets, and then also we're looking at some of these short-term trade setups in the trading room. Have a great weekend. I will see you guys next week.